I've been driving behind this car now for probably like 10 minutes. It's so loud and obnoxious. It looks goofy. He's probably tanked a whole bunch of money into this thing. Car people are such clowns, man, I swear.
Not all car guys are clowns. Some of today's clowns are women. We've got bad choices, horrible advice, and a guy discovering how interest works.
So I'm 25 years old, and I have getting up there to about $200,000 in debt. It is literally all in vehicles.
Okay.
It's vehicles and personal loans, just unsecured debt completely, and then I don't know what step to take to get out of this.
And so you said you're 25 years old?
Yes.
What's your household income?
It's right under, it's about $180,000 a year.
Cool. What do you do for a living?
In the oil field, so I just make sure that oil and gas comes up whenever it's supposed to.
He's in his 20s, makes $180,000 a year, and is almost $200,000 in debt, most of it tied to vehicles, because one expensive way to get to work clearly wasn't enough. That income sounds impressive until he realizes it belongs to all his lenders. He's earning more than most people and keeping almost none of it. He's not using the income to get ahead. He's using it to qualify for more debt.
And what are the vehicles that you've got? How much total debt exactly?
It's about $172,000.
Okay. What kind of cars or vehicles is this?
One of them is a camper, so I guess that's not really a vehicle. But anyway,
how much do you owe? How much do you owe on the camper?
$15,000.
Okay. All right. Give me another one.
Okay. Then I've got a Toyota Tundra that I owe $20,000 on, and then I've got a
almost $200,000 owed, and so far we have a camper and a Toyota. There's no Lamborghini, no Mercedes, not even a BMW. He's just buying regular things and somehow reaching exotic car numbers. Usually that kind of balance at least comes with something impressive parked in the driveway. He's turned ordinary purchases into a six-figure mess. Almost $200,000 owed without a single luxury vehicle to show for it.
Chevy Silverado that I owe $32. And then I've got a Nissan Altima that I owe $30. And then there is a Dodge Grand Caravan that I owe $25. And then there's also a trailer that we have that we owe $21 on.
You're married?
Yes, sir.
Okay. And how many kids do y'all have?
We have 2 and 1 on the way.
You have 2 adults and 1, 2, 3, 4, 5 cars.
Yes, sir.
Why?
He has enough vehicles to cover every possible reason for leaving the house. One for work, another for weekends, something to tow with, and a few more in case the others felt overworked. Most people buy another car when the first one no longer works. He bought another one before that became a problem. That's how you end up with a fleet without actually owning a business. All of the overhead, none of the revenue.
I have came to the conclusion that I will either have a car note forever or I'll just be paying for cars forever. And the reason I say that is because, technology is always changing, especially in cars. So in 10 years from now, do I really want to have the same car with the same interior, knowing everything else has already surpassed it? Hell no. So in terms, I do not care to pay any of these cars off. Honestly, knowing me, 3 years is the max. Then you gotta go have something else, something even better, less mileage, less problems.
He says he'll always have a car payment because he doesn't want the same technology and interior 10 years from now. That would mean driving a paid-off car with slightly older buttons. So instead, he's going to keep replacing the car so the loan never goes away. The technology gets newer, the interior keeps changing, and the payment remains the number one feature that never becomes outdated.
Before I ran the credit, I just wanted to go over a couple of things. First, how is the credit?
To be honest with you, terrible. Like probably below 6. So
below 6, somewhere in the 500s?
Not the greatest chance.
Got it. Okay, how much money do we have down?
Right now I'm in a pinch for money. I also have a truck on lease right now. It's at the end of its lease. I was seeing if you guys would like to, either buy it out or something like that.
No, we wouldn't be able to buy out your lease.
So he's bringing bad credit, no cash, and a lease he wants out of. There isn't really a strong part of the application yet. He's hoping they can remove the old problem and immediately approve a new one. The dealer's being asked to provide the car, the money, and the solution. He's mainly providing the problem.
Take your lease on a trade or anything like that, and fortunately, because the vehicle has 139,000 miles and it's a 2014, you're going to need to put a little bit more money down. And then especially if you have lower credit, you're going to have to put money down.
Okay, yeah, so I guess just scratch it for right now. I don't have any options at this moment.
I'm sorry about that. Yeah, if you can get a co-signer and maybe like a little bit of money down, like $2,500, $3,000, then give me a call, and then I think we could work something for you.
All right, no problem.
You got it, boss.
They can help him. He just needs to come up with a co-signer and a down payment. So the dealership's solution is for him to bring more money and someone with better credit. The approval really isn't out of reach. It's just waiting for a completely different application. The down payment covers part of the risk. The co-signer covers the rest. He'll still get the car. Everyone else gets the responsibility.
I've seen people buy cars in all cash. It's the dumbest move ever. Here's why. Car is a depreciating asset. The moment you drive the car off the lot, it goes down in value. Anytime you're looking to lease or buy a car, always put the minimum down to drive it off the lot. For example, if you're thinking about buying a $50,000 BMW, finance as much as you can, put down the minimum, get a low interest rate car loan, make those payments. At the end of the term, you'll be able to own that car fully and then just worry about maintenance. Do you think that buying a car with all cash is a bad idea? Hopefully you say yes.
Paying cash means the car is yours and the payment is gone. According to her, that's a bad option. Financing lets you keep your money while paying interest to borrow someone else's. So instead of losing the cash all at once, you can lose more of it slowly. The lender gets paid. You get to pretend interest was part of the plan.
When you go to the dealership and your credit's in the 550 range, let me show you what that's going to look like. You're going to get a breakdown that looks like this: 72 months, almost 25% interest. Now, what a lot of people think, oh, this interest rate's way too high, I got to get a cosigner. One thing you have to keep in mind when you're getting a cosigner is that their credit has to be significantly better than yours. I just had a customer, and this was her scenario. She said that she's going to get a cosigner. She comes back to the dealership with a cosigner, and then we run his credit. His credit comes back 5 points higher than hers, and she was a 545 score.
That's less of a cosigner and more of a second opinion. The application didn't get stronger. It just got another name added to it. 5 points higher is technically an improvement, but it's still the same credit situation with 2 signatures. They wanted someone who can help the situation. They got someone who can relate to it.
We then went ahead and submitted it to the bank, and the approval came back exactly the same. So when you go ahead and get a cosigner, you want that cosigner to be like a 750, 760, somewhere around there, just way better than you. If you find somebody with the same exact score, you're not going to get a better approval at all. And I'm going to be honest with you, cosigning for somebody who's in the 500s, I don't know. You have to think about it. There's a reason why they're in the 500s. But low key, if my credit ever ended up in the 500s, I'm doing credit repair immediately, and I'm not taking on any kind of loan whatsoever. It just literally doesn't make sense.
The extra name changed absolutely nothing. Same rate, same risk, just twice as many people involved. The lender didn't see a stronger application. They saw 2 nearly identical credit profiles, and no reason to lower the rate. Adding a second weak score doesn't improve the deal. It just gives the lender another person to hold responsible.
I owe for the car still $24,000, you said?
You owe $24,000 on the loan. $24,459.30.
On the car?
On the loan.
How much I owe on the car?
And so right now that is the car. That's the loan.
That's the car, okay. And I've been paying, and I purchased this car for $32,000, and I've been paying for 3 years, $780.
Nothing helps a drive go by faster than finding out how much of the vehicle still belongs to the bank. He's using the car and checking the balance at the same time. It's probably not the most relaxing number to hear behind the wheel, especially when the vehicle is right there reminding you what the money went towards. This probably would have been a better situation to have while parked. Most people check their gauges while driving. He's checking whether his payments made any progress.
So in 1 year, $780 in 1 year equals to $9,600. So 2 years will be about $19,000 and something dollars in 2 years. We're going to 3 years. 3 years gonna be like about 20,000, about 26,000, 27,000, 28,000 and something dollars.
He's adding up all the payments he made and can't figure out why he still owes so much. I don't think the interest rate was ever part of his math. He saw the payment coming out every month and assumed most of it was paying off the car. A lot of that money was just the cost of borrowing it. He was making the payments, just not making any progress.
3 years, and I'm still on $24,000. So I've been paying, I'm gonna hit 3 years in October, and it's gonna hit about $27,000 or $28,000, and I still owe $24,000, and I purchased a car at $32,000.
Right, and the APR rate.
Okay, thank you.
So after almost 3 years, the balance is barely moved. That's what a bad interest rate can do. You make the payment every month and feel like you're getting somewhere. Then check the balance and realize most of the money went everywhere else besides the car. You can make the payment exactly as agreed, and 3 years later still owe almost what you started with. That's it for this one. Thanks for watching. I'll see you in the next one. Bye.